had a very interesting morning talking about energy solutions and particularly focusing on the renewable energy side. And an integral part of that conversation is always the tax side. Budget 23 has introduced some expansive new incentives for tax and basically two key components. On the individual side, the incentive there is aimed at rooftop solar panels, and the panels only, not the batteries or inverters, and there a tax rebate equivalent to 25% of the cost of panels, rooftop panels, is given as a tax rebate limited to 15,000 Rand. A rebate means it's a reduction of a tax liability, so it's not a deduction from your taxable income but a liability reduction. Then on the business side, Section 12B is the main section that have provided accelerated depreciation allowances. Originally it was on a 50-30-20 basis, but after the budget one can now deduct 125% of the cost of equipment used in the generation of electricity from renewable sources. Now, that's quite a big change and makes a strong positive impact on funding structures and possibilities around renewable energy. There's some complexities around that one would need to navigate to comply with the requirements of that section. And in particular, SARS has issued some guidance in binding rulings around what constitutes assets used in the generating of electricity. And that includes, it's essentially assets directly involved in the process of generating up to the point of sale, generating electricity up to the point of sale. And as I've mentioned, rulings have been issued to that effect, so which is a positive guidance from SARS in this respect. Another important or interesting development is alternative investment structures that have emerged in recent months around these incentives in particular, and that's enhanced by these new incentives. And that's really a sort of private equity fund type investment that will facilitate investment by private individuals into solar projects or renewable energy projects, and that would work on a income and deed partnership basis where limited partners in that partnership, which will be the investors, would be able to deduct 125% of their investment from for tax purposes, which obviously is a very lucrative way of attracting capital to projects, to renewable projects, and certainly an interesting asset class for investment going forward. So certainly when looking and discussing energy solutions going forward and involving renewable, tax is going to be an integral part of structuring that and also of the funding of these projects.